Well, good morning, podcast world, and welcome to 2025. You have Angie with Producers XL on here with you, and you'll notice the name of our podcast has changed. I made this announcement in December, just a month ago, telling you that I've just had a lot of requests about kind of diversifying the content that we provide. And I heard that, I hear the feedback. And so what we really want to do is this isn't going to be the Producers XL show. It's obviously we're bringing the podcast to you. And if you want to have some fun and wonder why this podcast is now called Producers XL's Persiflage, you'll just have to Google that word. I was trying to find something funny, and we're in our marketing meeting, and everybody made fun of me, and that's okay. Um, but it's just something different, something catchy. Um, it's just a title. Really, what this is all about is the content and what we bring to you as insurance professionals. And is it relevant and is it useful to you? And so, this being the first podcast that I'm having in 2025, what I wanted to showcase is annuities. I want to talk about annuities. I want to talk not just about, and I told you in December that long-term care is not off my radar at any stretch. We're still going to talk about that. So, interestingly enough, as we talk about annuities and MIGAs and fixed indexes, I also can talk about long-term care annuities and where they fit in the space. And they absolutely have, I mean, if you contact the few insurance companies out there doing those, they'll tell you that they're just having a record year with that. But I want to introduce to you today someone that you may or may not have had an opportunity to visit with. Her name is Kayla, and she is actually at our agency. She is at Producers XL, and she is running the annuity department. And on top of that, Kayla's also running some of the long-term care, and she's also running some of the disability income. So we keep her pretty busy, and Kayla's doing a really fantastic job. So I really wanted to bring her on as our first kickoff podcast to kind of talk to you about that annuity space. Um, Kayla comes to us. I'll tell you, I don't know if she really would want me to share this, but she's probably okay with the fact that I say she's of the younger generation, which is really exciting to me. Um, I promise you she's there. Kayla, say hi.
Hello, everybody.
So she really is there. I'm not making up this person. I'm just doing a little bit of intro about her. She's 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 quick. I haven't given something yet that she hasn't been able to master. So it's Excel spreadsheets being one of them. So she's kind of does a whole lot of things for the agency, and she's really doing a good job, and she's able to keep up with everything. And Kayla and I actually take off next week to go to an annuity conference, and we're really excited about this because we've got some reports from LIMRA. Kayla and I are both looking at them, and if you're not in the annuity space, you need to be. If you're in the annuity space and maybe you're primarily just doing MIGAs, you really got to take a look at the fixed indexed market. And we'll talk a little bit about that. But Kayla, from the reports that we got from LIMRA, just because nobody wants to hear me talk all the time, what's the LIMRA reports kind of telling you? I know they don't have fourth quarter in yet, but I know there's some stuff in there about third quarter markets, and it's quite impressive.
Yeah, so according to Limmer's reports, the FIA sales were up 54% from the prior year's results. And this is due to the favorable economic conditions and growing need for guaranteed retirement income. And then the cut in interest rates in September had little impact on income annuity sales in the third quarter. The expectation of potential cuts likely boosted sales in the second and third quarters, and then SPIA sales were 17% higher in the third quarter than the previous years.
I mean, that just speaks volumes. I mean, and you can tell she's a little bit of an annuity nerd because she's out there blasting all these acronyms. But when she says FIAs, right, those are fixed indexed annuities, just for the general population. So right now, the annuity market is doing very well because people are the consumers, right? The folks that we help in our communities, they're looking for constant returns. and they want good retirement income. And there was a lot of disruption in the financial spaces. I know FinSecca really did a hard push when we had a lot of things coming through about the DOL and the fiduciary and the best interest. And, that caused a lot of, if you're going to sell an annuity, it's got to be in that security space. And, fixed annuities are not a securities product, it's an insurance product. And so we've at least, we're seeing with the sales that have increased the way they have, and I mean, we're talking billions of dollars of increased sales into annuities because people are wanting the safety of their money. And that's exactly what an annuity does, even if it's a fixed indexed annuity, right? The whole concept of that is selling the power of zero. There's upside potential. You got a base, there's no downside. You don't lose if you don't have gain, you still don't lose principal. So it's a tremendous market. And Kayla, I know that the bulk of our agent distribution, and it could just be because of our demographic, but I know when we go to other national conferences, I mean, fixed index annuities are, I mean, just continually, quarter after quarter, exploding in sales.
Mhm.
Our sales have a tendency to lean towards MIGAs because we work with a lot of registered reps. They've got to do their index business elsewhere. We respect that. But would you just real quickly, just for our audience that maybe isn't in that space and they're looking for that, kind of give us just a generic, what's the difference between a MIGA, and there's another acronym, what does that stand for, versus a fixed indexed or a fixed annuity?
Sure. The MIGA, which is the multi-year guaranteed annuity, um, it offers a more guaranteed fixed interest rate for a set period, whereas the FIA or fixed index annuity is tied to more of a market performance, which allows for higher potential returns. You can
Mhm.
pretty much think of a MIGA like a high yield savings account with a longer term, while a FIA tries to capture some market gains, but still protects them from the downside protection.
I love that, right? Because that just speaks to that LIMRA study that says, people are looking for that guaranteed retirement income. And that's exactly what these two products do.
Hmm.
And it would probably just depend on your client's tolerance and maybe as an agent, our ability to be able to explain an indexed annuity. And so those things are there. I wanted to pull out, Limra also did another study, and I kind of just went straight to the summary of this, but I find this really interesting. It's showing here that the annuity industry saw 3 years of record sales from 2022 to 2024, totaling more than 1.1 trillion in total sales, primarily driven by historic short-term rates, strong equity markets. But this last piece that I thought, and they're expecting that momentum to continue on into 2025. And I'm kind of leading us up to something that Kayla's going to spend some time talking about. They talk here about distribution firms, that's people like us, like Producers XL, can look to enhance the experience for advisors and customers through technology and process improvements to continue to grow the base of advisors utilizing annuity solutions for their clients. So tech is kind of a big thing. Tech is just a big buzzword in general in just the world right now. But in the annuity space, Kayla, I don't want to steal any thunder. Tell us a little bit about what you have, the technology that you're going to be bringing to the advisors that work with you in that annuity space.
We are super excited to be onboarding with Firelight and Luma, which these platforms will allow our agents a one-stop shop, basically, for all things annuities. It allows them to do illustrations, carrier product training, e-apps for all the carriers that we offer, faster enforced policy times, and then more successful in good order application submissions.
Wow. So that's impressive, right? So you've got a one place platform, and that product training kind of stands out in my mind a little bit, right? So that's when I think about all the agents that have come to this podcast and talked to me about long-term care, there's always long-term care training that goes with it. Well, there's a lot of training that goes behind annuities. Most of them probably have that one time NAIC training and but there's always product training. So if you sell a new product, you have to have that particular product training. It's
Mhm.
really cool that they can check all of that. And I think, Kayla, I may be stepping out ahead of myself here a little bit, but I think I heard a little rumor that there's a few other third-party vendors like SureLC, and some others like that, which is just a platform we use for contracting, and they do things like checking of proper training and things that are going to be implemented also into that platform to make it incredibly robust. What I think is interesting, right, is a lot of carriers are moving you, whether it's in the annuity space, the life space, even in the long-term care space, right? Everybody has an electronic application. It's just finding it on a single platform is a challenge. The long-term care space, that doesn't even exist. Um, but you get into the life insurance platform, right? You've got like Vive and iPipeline,
Mhm.
you've got those. Well, now in the annuity space, you've got Luma and Firelight. And so I would think that that would be, I mean, I can't imagine how busy you're going to be this first quarter trying to get everybody to see it, have a chance to visit with them, explain to them the process, how it's going to work, because you're right, it's going to reduce cycle time. Everything's going to have to go in good order. I think a lot of advisors are used to using electronic platforms, but now being able to go to one place and do your shopping there and get your illustrations, know your product training, and even drop the application, that's pretty impressive.
Mhm. And I know
Well,
a lot of the
oh
carriers
yeah.
now also offer, like, they do e-apps, but it doesn't stop them and prevent them from making sure they have all the information needed.
Oh, so now you submitted an e-application, you didn't check this right box or you didn't say the right thing here, it's still going to be submitted, but the agent, they might never be notified for a time frame, right? So now all of a
Right.
sudden that app's just kind of sitting dead in the water until those things are taken care of.
Hmm.
Interesting, very interesting. Well, this is all really exciting stuff. And I would tell all of you that if you're in that annuity space and you're in the market for an FMO or a BGA or an MGA or whatever you want to call us out there, and you want to kick the tires, we are more than happy. You can always go to producersxl.com. You can find pictures of all of us out there. You can email us from that. Kayla would be more than happy to visit with any of you if you're interested in this platform and how to do your annuities. But again, just to go back and reiterate that that annuity market is obviously booming. And another little, I guess, not to leave behind, Kayla and I work a lot on the long-term care annuities, and they're all the concept of all of them is basically the same, right? But it's just a great way when you start thinking about the Pension Protection Act and how you're allowed to actually put the money into the annuity and then pull it back out from long-term care services and not pay income tax on that money coming out because it is being used for care. I'm not quite sure I can say that enough, that that resonates enough to have you realize that even if you have your business and your model and you're doing this type of annuity business, I promise you inside there, you have clients that want long-term care protection, but can't get the long-term care coverage, maybe because of a health condition. Remember, these are annuities, so they're not as underwritten as a life insurance application with a long-term care rider or a chronic illness rider. They're not underwritten like traditional long-term care, more of a streamlined process. So inside your book, if you're in that annuity space and you've not explored the long-term care annuities, we want to help you with that because that is a really big space right now, along with obviously the trillions of dollars that are flowing in and out of this annuity market. We would love to help you with that. So, Kayla, I want to thank you for being my first guest in 2025. Obviously, agents and advisors reaching out to you on that annuity space, I think they're going to enjoy working with you and all the great technology that you're bringing to that space, as well as your knowledge of the industry and keeping your finger on the hub. I'm I'm sure you will educate me quite a bit next week when we're hanging out together in the annuities, and I've got all these wonderful questions for you. So I want to just pause for a minute and say thank you very much for being my first guest in 2025.
Of course.
And I thank all of you for coming and joining the very first podcast with Producers XL and the Producers XL Persiflage. We thank you for joining. Of course, this will be on demand. You can catch it on our website at producersxl.com anytime you want. Thank you very much and have a wonderful year.